Hey guys, how's it going? It's Gersha from Technical Option Traders. Let's talk about what's been going on in the markets and the weekly analysis and the update with that. So the first thing that we're going to talk about is so this market is trying to trend upwards, and as we can see from this downtrend line, we're going to focus on a clearer picture here. This downtrend line, the lows are getting higher, so this could be if you want to talk about it for argument's sake, that this could be an inverted head and shoulder pattern that is forming right now, and it's starting from here to here, right? And we're getting a pullback here, and this could have a quick breakout on the S&P 500 if we talk about it from this point of view, right? And this breakout could lead higher, and what we want to see is a break above 411 and push to at least 430, right? Because this low is higher than this, so this is setting also in basically a pennant pattern as well, where price is tightening in it as well. So that's what we want to see, and this could end up being a big break on the S&P 500, which could push it to the upside, right? So the analysis that we want to focus on also is price action itself. There is a lot of buying pressure that is happening here over the last couple of days, but what you want to see is it's not increasing, it is pretty stable. But if we look at the week overall, and we get into the weekly time frame, and the weekly, it is starting to increase, right? And right here we had huge buying pressure as well on the VIX, and that has caused this price action to go up. Now we can see a continuous upward push. Now keep in mind, next week we do have a shortened trading cycle, trading day as well, Monday being a holiday in the United States, and so we do have a smaller time frame, but we have huge economic data that is coming out next week that we will talk about as well. So what we want to pay attention to mostly right now is the price action at this level right here, which is 400. So the 400 price point is still important, and then the 404 downward trendline break. This could really set the S&P up for a big move upwards. The VIX is falling. As we can see, the VIX is getting below the saucer pattern that's been set up, and it's getting into this zone, which confirms that we could get a rally as well. And we could see the yields have been turning as well. So looking at the S&P 500, if we look at a smaller time frame, it is looking like it's going to break out of here, because we had a nice consolidation between these levels, between 385 and 375. So consolidation, we had a breakout, retest of 385, and then buyers stepped right back in, and they were able to push the price point higher. Now, what we can expect is price to consolidate here for a little bit longer before before the breakout does occur. So that's something that we do want to keep in mind. But I would be more confident at this level at 410 break. But we want to keep in mind here is this could either be an inverted head and shoulder, or it could just be a complete bull trap and then push it down a lot further, right? So if we look at the Qs, for example, the Qs on the other side have been the hardest hit, which I've mentioned multiple times before. And the Qs, they did try to break out here, but unfortunately they're not having the best of luck. But with the Fed interest rate decision looming in the following weeks here, this could actually be a really big decision that's coming up. And if Fed's policy ends up loosening, or any indication that it may get more available, and they're gonna stop tightening so hard, this could be a bullish indication. But then also, again, in the month of January, we also have earnings season, and earnings season ends up telling us which way the market is most likely headed. So overall, the Qs, they are looking like they're gonna trend upwards. If we get a break above the downtrend line with a rising volume, that would be something massive to consider. But right now, I am still cautious on it, because the downtrend is very strong on the Qs. It's something that we want to watch for. This could be a nice time to add to the Qs if you are looking at dollar cost averaging. But right now, I'm still very cautious, because this trend line test is coming up at 285. If we get this, we're going to break out to about 300. But this purple zone is still the one that I want to focus on. We have selling pressure. Once we get buying pressure defeating this, we can look at the Qs going to 330. Okay. The next thing we want to talk about is IWM. IWM looks like it's ready to break out, and I did say this in my last video as well. When the market does recover, small caps tend to lead everything else, and the money tends to flow there first. So that's something that we do want to look at. This is a nice double bottom pattern that's happening here. If we do get a breakout, like we are getting a breakout here, nice volume as well, we want to see a pullback and consolidation, because this zone has clearly been tested before, and last times it was tested, it was pushed right back down. Also, we can see these wicks where liquidity or sellers are sitting, right? So this is there could be a lot of supply here, and which could push it lower. So this level at 190 needs to be beaten by IWM. If 190 is defeated, and we can easily push a lot higher, and that's something that we want to consider as well. But if we get to this level, we can expect a pullback down to maybe 185 before pushing higher. So that's something that we want to continue to watch on IWM to see if that is a play that can come up. Dow Jones, I did mention this already. There is an inverted head and shoulder pattern forming, so we'll see how this plays out. If it does get above this level right here, we do want to see that breakout following nice volume. There could be a catalyst for it. Multiple catalysts are available this year that could happen, that can push the economy back up, saying that there might not be a severe recession, just a mild recession, and it might not be as catastrophic as people have been making it out to be. But nonetheless, Dow Jones is coming back up here, and a lot of the stocks in the Dow have been doing really, really well, like Boeing, Caterpillar. So that's something that we want to pay attention to. But we also want to pay attention to this liquidity right here, or supply right here at 350. 350 to 354. So this level we want to pay attention to. This could be just a volatile zone overall. So that's where we don't see any kind of direction. We see choppiness after 354. I think we'll get a nice clean break above this back to the highs, right? So that is something that we must continue to monitor for Dow to see if that play is available for us. Looking at gold here. Gold, I did mention this already in my previous video, that you could take this play in gold and how it could help you and what I was thinking about it. So my entry point I've talked about was 175 break. We got a nice break up to the upside. Now this has been a nice stretch, and you guys can see it's a vertical move to the upside. I'm not a big fan of this. When moves get very one directional after consolidation, I want to see a pullback, buyers coming back in and then pushing back higher. So we'll see where the pullback comes. That's why my stop loss is all the way down here, and we'll see how far it goes. This is my target 191, that we can have that in gold, and we can easily see that happening. A lot of G7 countries have been buying gold as well, so that's something that we want to continue to watch and analyze, and to see what can come out of it. Okay, so looking at the VIX is dropping down quite nicely here, and we can see, it's below this, and it's a nice move to the downside. So a lot of fear has been going out of the market, right? So that's something interesting that we want to continue to watch. Right, so if we look at here, you can get this on CNN or .com, which is the fear and greed index right here. It's talking about right now there's a lot of greed in the market, right? So market momentum is neutral, stock price strength, extreme greed, market breadth, extreme greed, neutral on market volatility, safe haven demand, there's greed, junk bond demand is fear, right? So when we look at this, right, there's telling us that in the stock market, whenever there's an extreme greed or there's an extreme fear, that's time to play the other side, right? So that's why even on the S&P and the Dow, this is something we can continue to watch, where the SPY, for example, we've had a nice move up, and but that is talking about extreme greed. And look at the move on SPY, right? It's very, very minor, right, compared to this downtrend. So if this is causing overbought conditions in any kind of way, that's something that we want to continue to monitor. That this could be just a fake out, and bulls get trapped and it pushes down. So the other index that we do usually want to pay attention to is on the stock charts. It's called all bulls. Okay, so if you look at this is not really flying all the way up here. When it was at the high, this is a sign that the market is very bullish right now. As we can see here, market is very, very neutral in the all bull index, and that's something we want to see. Last time I went to 32, which was in November, and you guys know what happened after that. We had a straight decline. If we look at the all bears as well, it's basically the market sentiment is neutral between bulls and bears. They're both extremely cautious right now, which is very interesting to watch. That bulls and bears are both very, very cautious right now. So we'll see what happens in the market. We can see that safe havens such as gold is doing really well, and also the huge talk, in the crypto world, Bitcoin pushed up. Like Bitcoin, sure, it pushed up depending on how you're looking at it. But I don't see a big play in Bitcoin. Yeah, sure, it could go to 25,000 easily, right? But there's a lot of consolidation and a lot of room for Bitcoin to just kind of consolidate for a little bit or chop around, and there could be a huge accumulation here in this little zone, and before it pushes up a lot higher. And or if it breaks this downtrend, sure, I would talk about 25,000 is a possible level. But if it breaks this, it's still holding on to its downtrend, and it can head to 14 to even like 98.50, right? That's something we want to continue to monitor. So whenever you're taking trades, make sure you have a look at the whole market and focus on that. Right now, the other thing we want to focus on is the sectors. Sectors themselves have been pretty interesting. We're starting to see a rotation now where right here, industrials are taking a hit, utilities are taking a little bit of a hit. XLRE, which is the real estate sector, is taking a little bit of a hit, but it's trying to bounce back. So that's something we want to continue to monitor. The sectors that did really well are mining stocks, XLYs, XLF. Financials are doing decent, even though JP Morgan Chase did come out with the fact that they are worried about a recession. So that's something that we want to continue to monitor and see if it's something that is concerning to us. But right now we're starting to see some sort of rotation happen, and we'll continue to watch that and see how we're going to take plays according to the rotation. But right now, mining stocks and gold seems to be the play, and that's something that we want to continue to monitor. If you guys like this weekly recap, I please suggest you like and subscribe to the channel, and I'll see you guys next week.